Welcome to The Big Perspective, the show where we talk to some of the smartest people in the Indian markets and dig into the biggest trends shaping our money decisions. I'm your host, Bhavya Dua. Today, we are again talking about financial advisors, RIAs and RAs, which is registered investment advisors and research analysts, the folks who really help us decide where to put our money. So in our last episode, we spoke about the RIA landscape in India and how the latest SEBI consultation paper affects that. But the changes proposed in the paper don't just talk about RIAs, but also about research analysts. Now, to understand what's really going on there and how SEBI's new rules impact this space, Mayank Bansal, who's closely involved with the RA Association, spoke with us. Here's what we are covering: the evolution of the RA landscape in the last decade, the hurdles they face under the current rules, and what SEBI's new proposals could mean for fees, KYC, and how they can operate going forward. Tune in as we break down into what these changes really mean.
For an market to overall grow and the broader market to be more efficient, we will need more and more RAs to cater to these different segments and different types of products which are currently not covered. And a lot of people in general are not even aware about existence of research analyst as a career, as a profession, as an option. Can anyone and everyone start becoming a RA? And will it lead to poorly delivered recommendations? RAs does not need to know the client.
So a very warm welcome on The Big Perspective, Mayank. We are thrilled to have you, and we'll be discussing all the proposed changes that the SEBI consultation paper has about the research analysts. So before we begin, could you give some context for our audience as to what RAs do and what the current landscape for the research analysts in India looks like?
Sure, Bhavya. I think I'm equally thrilled to be here. Thank you so much for inviting me. So just quickly, just getting started, right? I mean, in terms of what RAs do and what the landscape looks like. So a research analyst, broadly as the name suggests, is the one who's researching on securities. And when I say researching on securities, it is about obtaining information, obtaining data, doing analysis, and then issuing an opinion on such securities, which could be stocks, which would be mutual funds, and so on. And an opinion on that security can be in the form of, let's say, a buy target, a sell target, there's a price target, there's a stop loss, right? I mean, so there could be different forms in which such recommendation or that opinion is issued. But broadly, it involves analyzing those securities and issuing it. I just want to put it into perspective versus what investment advisors do, because I think the consultation paper addresses both of these different intermediaries. I think the fundamental role of a research analyst is to just sort of look at a security, look at a product out there, conduct its analysis and issue opinion on that. Whereas if you look at an investment advisor, the core role of an investment advisor is that of looking at, let's say, a client and understanding the financial position of a client-specific nuances in terms of the risk profile and all of that, and then suggesting a particular product to a client. So the fundamental difference between these two sets of intermediaries is that while research analyst is client agnostic, it is just security focused, which means it just focuses on that particular stock or that mutual fund without any client context. An investment advisor focuses on the client and prescribes what is best for the client given their financial situation. So I think that is the fundamental difference between the two professions.
Correct. So while we understand what a research analyst does and what an investment advisor does, if we talk about the current landscape for research analysts in India with all the regulations that have been in place for them, how does it look like?
Just taking a step back here, right? I'm just trying to understand that why the regulations are what they are, right? I mean, there's of course context to why regulations exist in a particular manner. So I think the research analyst regulations came out in 2014. That was the first time research as a profession, as a activity, as a business was sort of formalized and brought into the regulatory fold. Before that, research was largely driven by a lot of subjectivities in terms of how each one did their work, how each one sort of published their report, Uh, and one of the key drivers at that point of time for research analyst regulations to come out was that there was the primary problem at the heart of it was conflict of interest, which means that let's say if there's a person who's interested in a stock, they put out a positive research, positive, let's say a buy recommendation on that particular stock, right? And then that entices someone to buy into that stock. And suddenly, let's say the stock price rises. And then quickly thereafter, the person will sell that stock, right? And because there was a lot of conflict of interest in how research as a profession, research as an activity existed, is why research analyst regulations came into being.
Correct.
And this was not just India specific, by the way, right? I mean, it was a globally recognized problem. And one of the international bodies which sort of lays out the principles for securities law, and all of these national bodies like SEBI and all the other different countries, like whoever is the regulator, are part of that organization. It also lays out certain principles as to how you need to design regulations. And it also recognizes conflict of interest as it recognized conflict of interest as the principal problem which need to be solved, which had to be solved. It is in that context that 2014 research analyst regulations came out with this primary intent of formalizing this so that all the subjectivities get eliminated and this conflict of interest gets answered. So there are a bunch of regulations just sort of solving for that in terms of what needs to be disclosed to the client, what needs to go into the research report, in terms of the compensation that is decided for research analysts, so on and so forth. So that primarily then dictates the regulatory environment that we are operating in.
So while, as you mentioned, all these regulatory frameworks were brought in to solve certain conflicts for RAs, this also brought in with them certain challenges for them. So what are some of these challenges that RAs face with the current regulatory framework?
See, I think being in this business for close to, let's say, 4 or 5 years now, I don't think we personally have faced problems from a regulatory standpoint. In fact, regulations, the fact that regulations exist has sort of lent credibility to what we do, without which it becomes difficult. And if you are a genuine player out there, you would actually want certain things to be within the regulatory framework than it not being there, because then there are people who can interpret and implement things in a certain way which you might not like, right? So I don't see there is a pertinent or a very specific or a big challenge with the current regulations. I think with the intent or the objective it set out to achieve, I mean, it laid a very solid foundation, and then people had been operating with that regulatory framework for a while now. I don't think there were in particular any specific or let's say painful compliances or so on and so forth that people had to deal with. Like in general, it has been very conducive.
Got it. So do you think with the current, at this point in time, do we have enough RAs for the people in the market, or do we need more, considering the fact that our markets have expanded by 2x compared to the pre-pandemic levels? How do you see the need for RAs going ahead? Is it enough? Do we need more?
I think we need more. And then there are two ways to look at this. One is an investor lens, and then there is a overall markets lens to this. And I'll cover each one. So from an investor lens standpoint, I mean, we can try and imagine what an investor's life looks like today, right? And what is a typical investor today? And primarily talking about a retail investor. So we can imagine, let's say, a spectrum where on one end of the spectrum lies a very sophisticated investor who has all the time, skill required to manage their finances, which means they know that this is how they need to do asset allocation, or then this is how they need to invest. And they actually then have the time to also identify products and invest in those products. On the other end of the spectrum lies a novice investor who doesn't know anything and wants the money to be managed by an expert without a lot of involvement from their end. And let's say that is where an investment advisor comes into the picture primarily, right? And in between this spectrum lies the different personas of different types of investors, where I have some time, I don't have skill, I have some skill, I don't have a lot of time, and all of that, right? I think from the role that an RA will need to play will be catering to all of these different personas and use cases that exist between the farthest points of the spectrum. I think the farthest points of the spectrum is only where probably an RA cannot add a lot of value, because they can't do an fully assisted financial service to the client. And if someone is fully equipped enough, then anyways, they don't need an RA. But in between, if someone has some sense of their finances but doesn't have time, then they can actually seek the services of an RA would have researched on a product, and they can actually pick that product which has been researched upon. So it saves time for them. And then, for example, let's say someone has a thesis or an idea that, let's say, for example, in India, manufacturing story is going to play out. Then let me pick up a portfolio recommendation which relates to manufacturing as a theme, right? So I think across all of these different personas is where RAs can play. And because our retail participation has grown, and I would like to believe that all of these different personas are present in different proportions, is why RAs need to be more in number to be able to serve these many clients. Like, just from a penetration standpoint also, it's very low if you compare it to, let's say, something like a USA, right? I mean, the penetration is low. So I think there's an investor lens to why there needs to be more RAs supporting these many more investors, just to serve these different shades of different investors and different use cases. The second is, I think, from a market standpoint, where so if you look at how an efficient market should function, right? I mean, for an efficient market to function, there needs to be enough coverage, enough information that is available, and then that is sort of made consumable by someone and sort of used in doing their research. So in India today, let's say the top securities are well covered, as in there's information that is available, and then there are people also who are consuming that information and presenting it to the end investors in a format that is consumable. There's enough research, there is enough analysis that is happening. And hence, for largely speaking, for those segment of stocks, the market is functioning very well, right? I mean, as it's an efficient market largely. Whereas if you look at the bigger inefficiencies that exist in the market today, they largely belong to some stocks where either the information is not available as much, or there are not enough people covering that information. And that is where you hear about all these inefficiencies, right? I mean, where the prices are sort of mismanaged and all of that. So for a market to overall grow and the broader market to be more efficient, we will need more and more RAs to cater to these different segments and different types of products which are currently not covered. Because then they can seek the right information and then use that information to come up with an opinion and analysis. And then there is no dearth of information that is available for people to take decisions. Information is out there. And generally, then we can expect the market to be more efficient. So both from a investor growth standpoint as well as a market growth standpoint is where RAs can play a big part. And I think it is quite inevitable that this profession should grow more than what it is right now.
Right. So when we talk about your clear-cut answer on if we need more RAs or not was a big yes, correct? And you also discussed the reasons of it, the investor lens and the market lens. But if we look, why do you think that has not happened? Why have the RAs not increased as much as they should have, maybe? Do you think, like the question I asked before was, are there any challenges for RAs with the current regulatory framework? Do you think the requirements that were there in terms of qualification, certification, net worth, all of those things which have been proposed to change in the current consultation paper, do you think those acted as certain barriers for more RAs to enter in?
So I think I'll break it into two parts. One is, I think it's a awareness problem. Like people in general, and a lot of people in general are not even aware about existence of research analyst as a career, as a profession, as an option. It still remains very niche. So there needs to be widespread awareness about existence of RAs as a attractive career option for people, where if they want, they can work with, let's say, independent research agencies, independent companies, or they can start things on their own because individual RAs are also allowed. So I think one is awareness. And then the second layer to that is the attractiveness of the profession, just from the point of view of how big that business or career opportunity can be for someone. Right. So awareness largely, I think, can be solved for. Right. I mean, it is about more education and like the platforms like you, right? I mean, where a lot of people would get to know about it, right? I mean, new age brands just investing that time and energy to make more and more people aware about existence of this as a career option, as a profession, right? Making it attractive. I think then there are two parts to this. One is a more macro part to this, where we are saying that India growth story will play out, financial markets will grow, and there is enough and more room for more RS to exist. I don't think there is a question on that or a doubt on that. And then someone needs to just sort of invest time and be patient about playing that game. Because largely, like what we see is like capital markets largely is a long-term game, right? I mean, it takes time for people to build credibility, trust, because then someone is paying you money, accessing your research and all of that. So I think then people need to be patient enough to be able to invest into that. So I think this is the fundamental construct of how RA as a profession could grow. And to your specific question on whether net worth is a problem, experience is a problem, I don't see that to be a big challenge. But sure, like SEBI sort of has brought that out as one of the key reasons. It has also taken feedback, right? And they said that it has come out in their consultations that experience sort of becomes experience is becoming a barrier for people to enter. One. And second, they've also proposed a part-time RAIA type of a construct, right? So I think that is a thesis. We'll have to see how that will play out. And even on net worth, right? I mean, so for corporates, I think net worth requirement has dropped, but for individuals, it has remained the same. And in fact, beyond a particular number of clients, it has increased, right? So if anyone anyways was interested in doing this business meaningfully, then from a corporate structure standpoint, I'm not too sure if 25 lakhs versus 10 lakhs could make a lot of difference, because the maximum deposit requirement now will be 10 lakhs if you are above 1,000 clients, right? Versus a net worth requirement of 25 lakhs currently. So that has been relaxed. But let's see how many people just enter the profession because of that. I think it will be a lot to do with the core part that I explained before that, and probably not so much to do with experience or net worth being barriers.
So, what, according to you, were actually the reasons that prompted SEBI to come up with this consultation paper on improving some of the existing regulations?
Right. So I think two, three things. One was it last came out in 2014, like these regulations, right? And over time, the markets have grown a lot, right? In terms of how people invest, in terms of just the sheer size of the people or the market size, right? So a lot of developments have taken in the securities market, which was one of the key drivers. And SEBI, I think, had constituted a working group about 2-3 years back where they were reviewing research analyst regulations in the light of those developments which have happened in the securities market over the last 6 years since when the regulations came out. And after that, I think it was a lot of focus from the government that they wanted to ease the compliance burden and also reduce the cost of doing business. Right? I mean, it was one of the mandates that came out in the union budget as well. Right? This was, I think, financial year 23-24 or 22-23, not able to remember well, but around that time. And it is then that sort of different industry bodies or different regulators got into understanding what are the different challenges in terms of compliances from a process standpoint as well as cost standpoint. And then SEBI had constituted a working group to look at those challenges for different sets of intermediaries. And then IARA was one such working group where they had looked at it. So I think it emanated from two things. One was the development of the securities market and then the regulations to reflect the reality of what it is. Second is that ease of doing business, the cost of compliance, easing compliances in general. And I think the third thing also sort of which has been brought out in the consultation paper also is there's a lot of perceived regulatory arbitrage between IAs and RAs. In general, it seemed like IAs are subject to more stricter regulations than RAs. And because they believed that regulatory arbitrage should not be a reason for people to select one profession or one license over the other. So let's harmonize the regulations at least. And then whoever is truly interested in doing what is what they register for. So I think these are then the three sort of broad buckets which led to SEBI doing this.
Correct. So when we talk about these regulations, the proposed changes in the current regulations, what do you think are some of the good points in the consultation paper? And again, following up to that, what do you think are some of the misses in the consultation paper?
So I think let's start with the positives, where we have a very clear positive, so to say. And again, like both we can look at it from an investor lens as well as then from a RA lens. From an investor lens, I think there is a lot of focus on sort of building trust or enabling trust. What that means is, for example, they have now said that you need to have terms and conditions to be disclosed upfront to the investor. And the investor needs to confirm that. Now, this was not a mandatory requirement before this. Now, this is a step in the right direction because then the investor knows what they are subscribing to. So this is investor first in terms of investor protection, as well as from a professional standpoint, it's good, right? As in, it just builds that trust and credibility that whatever the investor is signing up for is known to the investor upfront. And even within terms and conditions, there is like a most important terms and conditions that need to be disclosed in a particular manner. So something like a key fact statement, right? I mean, if you have to draw parallels from the lending setup, that there's a key fact statement, right? I mean, so beyond everything that is buried in the fine print, there is still some key information that you need to show to the user. So I think most important terms and conditions, I think. So that construct that has been imagined is a positive step. Second is just the contents of the research report, what it should contain, the standardization, again, goes a long way in ensuring standardization and then just building that credibility for the profession. So just a couple of things from an investor point of view. Certain things from an RA standpoint, which has worked well, might sound administrative in nature, but I think would be really helpful, right? As in, so for example, one of the couple of things, right? I mean, one is that a principal officer for a RA need not necessarily now be a director of the company. It can just be a business unit head. So they have actually recognized that RAs could do multiple businesses, which was always there. Now it's just that the regulations lend itself to that construct very well, because then you need not necessarily have a research business unit head being a director of the company, right? I mean, it was just an administrative overhead. So that has been eliminated, for example. Compliance officer, for example, can be an independent professional outside the organization. So it could be a CA, CS, and all of that. I think that is a very good step. On net worth requirement, like I said, right? I mean, it has been reduced, right, from 25 to 10 lakhs. I mean, that is still a positive development, right? Uh, I think the NISM exams, right? I mean, uh, so basically at every certain period you had to give that exams fresh, versus now it is just incremental syllabus with the incremental changes. Now that's a lot of value add, right? I mean, because then it removes all of those redundancies and sort of artificial constraints or just administrative overheads from the business. So it just frees up that mind space, that bandwidth, and even cost, right? So to say, I think so. This has been quite positive. In terms of misses, I wouldn't call it misses because I think we still feel that whatever SEBI is suggesting, uh, it. I mean, they were open to feedback, right? I mean, as part of the association, also we have represented, and there are individual uh, research entities who have written to SEBI, and in general, SEBI has been very consultative and open to feedback about all the proposals that generally also have come out so far and going forward also. So I think on that front, I think there are three themes which are standing out, right? And this is also on the basis of our conversations within the RA community. One is on the commercial aspect of it. On commercial aspect, again, like there are three broad things that have come out. One is a fee capping. One is a fee capping of whatever 1.25 lakhs, and then there is maximum advance fee of 1 month, and then there is mandatory refunds in case of premature termination of service, right? I mean, so so I put this all three in a commercial bucket, and across all of these three, I think doesn't align with what RAs are looking for, and there are reasons across each, right? I mean, because uh, uh, let's say, for example, if I have to pick, let's say, 1 month fee, 1 month advance fee, as an example, I think that will counteract to the long-term investing behavior that we are trying to inculcate for retail investors. Because if you are enabling only 1 month contracts between two parties, then you are essentially saying that you need to come back and renew that contract every month, which adds a lot to the friction, both for the RA as well as the client. And also then it sort of leaves open the fact that a client might not renew because there's a positive action required from the client probably, right? Which then means that client will engage the services of a specialist or expert for a lesser period of time and then probably not invest or invest in a manner which might not be as healthy, right? So in the interest of overall development of our markets and just ensuring that there's a long-term investing culture that gets embedded, it is important that regulations allow for longer-term relationships to get formed, which it doesn't allow. For example, right? I think so. That was an example. The second sort of theme which has come out, which again should be solved for, is the overall quality related aspect, right? Because the experience criteria has been relaxed. There's a construct of a part-time IA, part-time RA, right? So there's a lot of apprehension about what will it do to quality. Because then can anyone and everyone start becoming a RA, and will it lead to poorly delivered recommendations? So I think that exists. Basis our conversation with SEBI, we sort of understand their point of view is they don't want to, they essentially are saying that experience should not dictate, or it necessarily does not dictate who should or should not be a RA, is what their thesis is. But the industry's point of view is there should at least be some experience barrier so that there is some minimum quality that they can achieve. So I think the disagreement is whether experience plays a crucial role in determining quality. And I think that those are the two viewpoints that exist today. So from 5 years for graduates, I think they have completely eliminated it. Industry is asking that you might want to relax it, but still, let's say keep some experience criteria so that some quality gets maintained, right? So I think on that, I think the third theme which has sort of emerged is overall on KYC and the KYC related norms, right? And also on terms and conditions, they are sort of the proposal says that you need to get terms and conditions agreed through an Aadhaar based OTP, for example, right? So all of this seems like just too much and an overkill for a profession whose only job is to submit or do analysis on securities and doesn't have to do a lot with clients. The clients just are paying them fees for doing this service. They don't need to necessarily interact with the clients to even do their work. And the only interaction is that collection of fees, right? So all of these, if client KYC norms, etc., just adds a lot to the overall burden. Like RAs are not even in a position to influence client trades or get them to transact or uh, like they don't touch clients' money or security in any form or fashion, right? So it seems like it might be an overkill for the role that an RA is supposed to play.
So, while discussing these misses, when you talked about the commercial factors, you mentioned about the fee cap. So, discussing a bit upon that further, just like the RI regulations, it has proposed a fee cap of 1.25 lakhs, right? This does feel odd as we discussed. So, should there be a cap at all?
Like just being a capitalist, no. Uh, See, the point is, I mean, sure, there can be a cap if SEBI or the regulator wants it, right? As in, they're trying to eliminate any case of like bad actors sort of using it to their advantage. So that is the lens that they're coming with, right? But then again, two things broadly. One, it doesn't align with IAs today. Like IAs have a variable fee optionality. So there's no hard cutoff on the absolute amount of fee that they can make, right? What that means is on fixed fee, if they charge fixed fee, then they can make 1.25. But let's say if they don't want to charge fixed fee because they see that they will manage a lot of assets, or let's say they will advise on a lot of assets, then the variable fee model says that you can charge, let's say 2.5%. Now, there's no absolute cap on the amount of money someone can make, right? If you're advising on 1 crore of assets, you will make that 2.5%. On 10 crore of assets, you'll make 2.5%. So there's no cap on the absolute amount that an IA can earn. But because RAs are client agnostic, they don't have to do with clients and they don't sort of advise on clients' assets, there's no variable fee construct. Or if there's no variable fee construct, then we are actually putting a hard ceiling on what is an absolute amount of money that an RA can earn from a client, which seems very, which does not truly represent the interests of the RA. And then there are other things as well, right? As in, if you put hard cutoffs on how much someone can earn, it reduces the attractiveness of the profession, which comes to the point of where if we need more RAs, then this becomes one of the key things, right? You have to make it attractive as a business for people to pursue this, right? So it defeats that point then. One. Secondly, it sort of stifles differentiation, right? I mean, people generally would try and innovate or differentiate and invest in quality if there's a upside, if there's a premium to that, right? I mean, at the end, I mean, people are doing business, right? There has to be some upside to that. But if there's a hard cutoff on the amount of money that I can earn, then there is a hard cutoff on the amount of investment that I am willing to do because I know that my upside is capped. So then why would someone want to invest in high quality research in terms of building a high quality team, high quality tools, high quality technologies, right? Just generally, why would someone want to do that if there's a hard cutoff on the amount of money to be made? So I think that doesn't sort of represent truly RA's interest today. And also, I think it is regressive for the industry as a whole. We would want people to invest in high quality research. It's the need for this market to be efficient, right? And the suggestion could be that, look, whatever you are charging the client can be upfront, disclosed to the client, right? I mean, all the terms of service and everything it is anyways being made mandatory. So there is no sort of the transaction that is happening in the dark. Like there's full disclosure, it's happening in transparency. So as long as you are keeping the client at the center and disclosing fully about what your service is, what the payment terms are, and if the client is signing up for that, not really sure why we need a cap.
Also,
And,
if I'm, yeah, please
and
continue.
just to add here, I think also from a client standpoint, they might be willing to pay more for higher quality research. So we are then also distorting the free market economics where there is a demand for high quality research, but then people don't want to invest into that high quality because there's no upside.
Correct. Makes sense.
Yeah.
So, if I'm not wrong, correct me please if I'm wrong, I'm just trying to understand. RAs cannot charge a percentage of AUM as a fee model, right? They can only charge a fixed fee as of yet.
Yeah. So the current regulations are silent about the fee model, but it is sort of intuitive that RAs can charge only fixed fee because there's no what will you peg the variable fee against because they are not involved in advising clients on any assets, right? So practically it's fixed fee model that RAs operate.
Correct. Also, another point that I want to discuss here is that in 2022, there was an enforcement order that SEBI passed, which affected RAs offering model portfolios. Now, there was a lot of confusion over this, considering the fact that the consultation paper makes explicit carve out for this offering of model portfolios now. Is that ambiguity resolved according to you?
So I think that was not an enforcement order. Like this, it is slightly technical. I mean, it was a settlement order. So settlement order doesn't necessarily become the law of the land. I mean, it's just an arrangement to say that I'm not agreeing to whatever you are alleging, or I'm not refuting or agreeing, but just settling this matter with you. So as per SEBI regulations, it is allowed to settle matters if you don't want to invest a lot of time, energy in going through that whole process of arguing your case and all of that. So there are explicit provisions. So the basically the order that you are talking about,
The Amit Jeswani settlement order.
yeah. So that is a settlement order. So it's not an enforcement order. It is not law. It's an isolated incident that happened between two parties, which is not even law, right? But sure, like just from a optics standpoint, it can cause that thinking that look, this matter was settled. What does it even mean, right? Uh, but I think, and then we need to lean back on what the regulations state, right? I mean, fundamentally speaking, uh, which says that you can issue opinion on securities, right? And it has been then clarified in other communications that SEBI has issued as well, right? And after this order as well. So I think SEBI's stance on this was very clear. That settlement order was just one of sort of a blip that happened, and that too was not law. The fact that consultation paper now has it just formalizes it and reiterates industry's understanding that it was always allowed and it should have been as well, but from a first principle standpoint, given like coming back to my definition, right, which I sort of explained, that you are issuing an opinion on securities, which has nothing to do with the client. And as long as it's just that, then it's a research product, which was fairly within the regulations. But sure, like consultation paper clearly, squarely sort of clarifies that if at all there was some doubt.
So, while talking about what the consultation paper clarifies and allows and disallows, in case of RIA, SEBI also allows distribution as long as there is a Chinese wall between both and a segregation at a pan level, correct? But the consultation paper allows distribution for RAs also as long as there's a similar sort of a separation to RIAs. Is that a good move according to you?
So just to clarify, Bhavya, so practically what it will mean is you can't provide advisory and distribution to the same client because you're segregating at a pan level. So if you are talking in IA context, investment advisory context, if you are taking advisory services from an investment advisor and investment advisor is charging you as advisory fees, then you cannot be charged for, then the investment advisor cannot earn distribution income from you. So let's say if there's a regular mutual fund that is being distributed, then the same client cannot be the source of both the incomes for IA. You are allowed to conduct both of these businesses. It's just that the clients cannot be the same. The same thing exactly has been implemented for RAs, right? I think in case of RAs, it might be slightly misplaced because an IA still has some influence, some control over the client, given it looks at the client, it has a relationship with the client, and then it issues its advice. RAs does not need to know the client. It does not have a deep relationship with the client. It does not interact so much with the client, right? I mean, it issues an opinion on the security, client comes, buys that. So if you are not in a position to even influence what the client is transacting, investing into, then for an RA, such a restriction might not make as much sense, right? It makes sense for an IA because then you will be like, you can advise on assets on which you are making higher distribution income, right? And then make both distribution as well as advisory income from the same client on that product. For a research analyst, that conflict is not that much, given that even if it issues let's say a buy recommendation for something, it is not even in a position to influence that particular client to buy that particular product. One. So if at all we have to sort of do this for RS, then I think it can be at a client product combination.
Okay.
Which means that if I have issued, let's say, a buy recommendation for a mutual fund, or rated a mutual fund, and then it's highly rated mutual fund according to me, let's say. And if the client buys the same regular scheme mutual fund from me, then you don't allow that income to be made probably. But if the same client comes to me and buys some, and if I'm also a distributor and that business is segregated, and if the client is buying some other mutual fund at its own discretion on which I'm making a distribution income, then I'm not conflicted in any way.
Correct.
Right? So I think if at all we have to restrict it, it can be at a client product combination and not really at a client level, because then, like, if you to think from a client standpoint, today, let's say if I have built a platform, I provide research services, I provide distribution services, let's say, and my platform is something that the client trusts. But just because there is this regulation, client will have to go to two different platforms to take these different services.
Correct.
Whereas if it is wanting to invest into a product which I have not researched on, then it can use the same platform for doing that. And there is no conflict of interest also.
Yeah.
So it just might be more efficient if it's a client product level restriction for research analysts.
Got it. But like similarly, if we see the other side of the coin here, won't RAs be more tempted to maximize distribution revenue, considering that they might be more lucrative than the RA fees now, since there's a cap also on that?
I think fundamentally different businesses, as in, will really depend on what a RA truly wants to do. And sure, they can do both. And in which case it becomes a choice that if I am willing to do both, then what do I choose? Because there is a trade-off, right? I mean, hard to say, right? Because the business case for both are very different. And distribution is a lot about reach, right? Versus research is a lot about analysis and opinion. So I think there are very different businesses in itself. And the business case for both will be different. So hard to say that people will opt. Like, sure, if someone wants to do both, then they might have to choose one over the other, depending on where their true skill set and core capability lies. So if they feel that they can do good quality research, get a lot of clients, then they will stick with research. But if their focus is a lot on distribution, mere distribution, and not a lot on research, which they think is not their core or their sort of their forte, and distribution is, then people will choose it for that. So I think it will stem from a lot from their core capability of what they want to do, because they might just be very different businesses to build and activities to do.
Got it, got it. So again, going back to our umbrella question here, where we talked about the good parts and the misses of the consultation paper,
Hmm.
we while we were discussing the misses, we also discussed that how some expenses have been increased or decreased for the RAs to function and to operate. So if we talk about KYC norms here, if I am right, then in the earlier RA regulations, there was an ambiguity on whether RAs were supposed to do KYC or not. But I think this paper explicitly states that RAs must do a KYC and maintain all the records, etc. So doesn't that increase the cost burden of being an RA as well? And is it really necessary in your viewpoint?
It does increase the cost, like without a doubt. Uh, and whether it is really necessary, I don't think so. If at all we have to apply KYC related obligations, it can be in a manner which is more leaner and cost friendly, cost efficient. Uh, so, I mean, fundamentally, what is an RA doing, right? I mean, RA is researching on securities and just issuing it out to the public. So, the only relationship that exists between an RA and the client is that of, like, an RA just receives fees for the services that it is giving to that client. It neither is in a position to influence where the client invests. It doesn't touch clients' money or securities in any manner. So fundamentally, from a first principle standpoint, there is no need for a RA to know the client. Like if you have to just put it very literally, right? As in, even if I don't know who the client is, it doesn't really matter to me, because what work I am doing doesn't really is not governed by who the client is, right? I mean, so I think there's just from that standpoint, KYC doesn't seem to make a lot of sense. If at all we have to do something, the suggestion could be that you don't need to necessarily conduct a full blown KYC and follow that entire process, because then that is more costly and time intensive. Also, from a client standpoint, it adds a lot to the burden, like from an experience standpoint. Uh, so the suggestion could be that so they can just do a KYC check. What that means is whether the client is KYC verified or not. And if it's validated, then only the client can purchase services, versus if it's not, it need not do it. Right? And it's a very lean and a easier and a cost effective way to do this, if at all we have to do something like this. But fundamentally, first principle standpoint, KYCs don't seem to make a lot of sense.
Got it, got it. And when we're talking about the regulations, since the SEBI consultation paper talked about both RIAs as well as RAs, considering the fact that RIA regulations have been significantly relaxed as well, how do you think that affects the relative attractiveness of RIA versus an RA?
So, like I said, I think that was the core intent as well of the consultation paper. It wanted to remove the regulatory arbitrage between the two professions because of their perceived similarities. And the point of view was, let's harmonize the regulations so there's no regulatory arbitrage between the two. And then it will really depend on what truly does an entity or an individual want to do. So I think it does that well, right? It sort of harmonizes it between the two professions or two intermediaries. Uh, Now I think whether someone would want to become an RA or an IA from a regulatory standpoint doesn't matter a lot, given the regulations are broadly similar. And then it would what it will truly depend on is whether someone wants to do a security first business or whether someone wants to do a client first business, which is the essential difference between the two, right? So I think it will just truly be dictated by that versus regulations then.
Got it, got it. Again, we have discussed Mrs. quite a bit in detail right now in our conversation, and all the points that you've mentioned there. Apart from that, do you think did the consultation paper miss any opportunity to change anything else apart from what have been suggested and what we have already discussed?
I don't think there's a particular miss in addressing something, uh, broadly speaking, right? Uh, I think it covers all the pertinent areas, good or bad, right? I mean, whatever we discussed, right? Or where things need to be better. We just discussed all of that. I don't see a challenge there. And I don't think it particularly misses anything which is very meaningful and very big for the industry right now.
Okay, okay. So, going forward, how do you think, in your view, the landscape for RAs look like in India?
I think there are enough macro indicators for RA as a profession to thrive. Uh, what would change, or just from what will grow more? I think there's one segment that I spoke about, right, which is sort of underserved from a market standpoint. I think that people would want to serve more. One. Secondly, just the nature of research itself. Today, there's a lot of fundamental, there's a lot of technical, individually, separately. But I think there will be a lot of quantitative plus fundamental kind of analysis or services that would come up, broadly speaking. And I think model portfolios will grow. Well, I'm biased, but I would believe that model portfolios, given it has also been formalized, is here to grow. I think broadly that this is where I think it'll move towards making our markets more efficient, as well as serving uh, our investors well and in a manner that enables just the ecosystem growth. Yeah.
All right. I think those were the points that I wanted to ask. Is there anything that you think we would have missed of this out of this conversation, which should be highlighted or put in front, that our audience should know or must know, that you would want to share before we wrap this up?
No, Bhavya, I think you were very thorough with your coverage, and you've managed to get all the pertinent points out from my personal viewpoint, as well as certain the association that I represent, right? The RA association. I think all the pertinent points have been discussed. So I mean, thanks for that.
All right, then. Thank you so much for being there on the show with us and for taking out the time and explaining me and everyone who will be listening to this how the RA landscape has actually evolved since the regulations came in place a decade ago, and what does the future landscape of this space also looks like, and for decoding everything that the consultation paper had to say. And once again, thank you so much for being on The Big Perspective, which is presented by Markets by Zerodha.
Thank you, Bhavya.
Thank you. And well, that is all for this episode. I hope you're able to take away some insights from this interesting conversations that makes you feel a bit more smart. And stay tuned for such insightful big picture perspectives every week.